Market Review. I'm your host, Robin Murray, here today with Chief Investment Strategist Scott Kuby. Welcome, Scott.
Thanks, Robin.
So, trade deals are in the news a lot lately. Tell us about how trade negotiations affect the markets.
There's a Trans-Pacific group that's seeking to put together a 12-nation agreement to lower tariffs, especially on services. And I think that's one of the really positive things because the U.S. is extremely competitive in services. The other area I think is really positive with this is Japan is likely to benefit because they need some pressure to make their economy more efficient. And trade deals are a way to do that without making them enact a lot of legislation. So the market makes the Japanese market more efficient, should be good for investors.
Okay, great. So it's April, and a lot of companies are releasing their first quarter earnings. What can we expect from earnings growth this year?
Earnings growth is expected to be weak, especially in the United States. There's been some pressure because the dollar has gone up, and that's made things more difficult. Also, the economy is just not growing as quickly, and there seem to be some margin pressures that are going on. One of the things to remember is that share repurchases have been a big contributor to earnings. Those have started to wane some, and so companies in the market are starting to look at earnings with a bit more critical eye than we've seen in the past.
Okay, so where should we be investing?
We see quality stocks, which has been one of our themes for the last couple years, as really attractive. Normally, you would expect quality that you'd have to pay up for, but by some measures, quality is cheaper than low quality, and so that really represents a great opportunity. We also expect interest rates to rise and volatility to increase. And it turns out that quality stocks tend to do well in those environments when both of those things are happening. So from that standpoint, we think quality stocks are one of the best places to be in the market.
All right, well, great. Thanks a lot, Scott. And thank you. We'll see you again next week. Thank you for your time and trust in CLS Investments.